Did you know that the CDC eviction moratorium is directly causing your rent to go up? That's right, the CDC eviction moratorium, which was originally supposed to expire on July 31st and was just extended through October 3rd, is a direct contributing factor to the housing crisis we're seeing in America right now, and a real reason why rental rates are exploding and the cost of living is exploding for so many of us who are still paying rent. How does this happen? Well, basically, this moratorium makes it illegal for landlords to evict tenants who aren't paying rent and to collect on that back rent. As a result, many landlords are now saying, hey, I got to make up this revenue shortfall somehow. How am I going to do that? By increasing rent on everyone else. And the CDC eviction moratorium is directly responsible for this occurring. So what I'm going to do in this video is give you guys all the data on this topic. I'm going to show you how much rents are going up in America right now. The numbers are going to shock you, record levels. I'm then going to explain how the CDC moratorium is directly to blame for this by incentivizing landlords to increase rent on those who are still paying, as well as constraining the amount of housing supply available in the market. The third thing I'm going to do is explain how inevitably, as with any type of government policy like this, it's going to end in disaster and will create a housing meltdown and a housing crash. All right, guys, let's get into the data. And we're going to lead things off by looking at just how much rent is going up across America, the rent that you and me pay as renters in America who are still paying their rent. This is data that's tracked from Zillow. They track the typical monthly rent that Americans pay, and this is showing the month-over-month percentage increase in that rent. And what I want to point you to, your eyes are probably drawn to it immediately, is the tremendous spike in rental rate increases that's occurred over the last 4 to 5 months. We can see here that in June, we had a 1.8% month-over-month increase in rent. That's huge. Never before in Zillow's history of tracking this data has there ever been a month-over-month rental rate increase at that level. And what's concerning is that we've had a couple months in a row of these high increases. So today, Zillow is saying the typical rent in America is around $1,800 a month. Just in February, it was below $1,700 a month. So amazingly, in just 4 months, the typical rent that an American is paying has gone up by 7 or 8% in total terms. And this is an absolute housing crisis occurring right now. We're coming out of a recession, right? The U.S. is down 6 million jobs, and there's a global recession going on, and yet rent is going up at record rates. I know a lot of you guys are feeling this, but we got to ask the question, what's going on? What's causing this? And this is a simple supply and demand situation. Right now, the demand for rental housing is very, very high. There's either a lot of existing households who are renting or a lot of newly formed households that want to rent, and the supply isn't there to meet the demand. And as a result, rental rates are going through the roof. And I know this is something that you guys are experiencing. I see it in the comments all the time. It's something I'm experiencing here in Austin. Rental rates are really going up the last couple months. And a lot of you are asking me, Nick, why is this happening? Why are rents going up so much, especially when there's 6 million job losses across America in a global recession? How could rents be going up so much? Well, there's a simple answer, and it's that the U.S. government has created a very artificial environment for the rental housing market. The eviction moratorium has essentially kept people in their unit who aren't paying rent, and that's depriving the housing market of inventory that normally would be available for newly formed rental households who have every intention of paying rent. Now, to put some numbers to it, there's typically about 1.5 million evictions in America per year. When someone gets evicted, they often move in with friends or family. And when they move in with friends or family, that actually decreases the amount of renter households, decreases the demand for renter households, and creates more units available for other people to rent. But all of a sudden, when you make evictions outlawed and you freeze evictions, that process doesn't happen, and the amount of housing units available to rent becomes constrained. And you can see this point evidenced on this graph, which is looking at the year-over-year increase in household formation across America. How many new households are being formed each year? And I think some of you might be saying, what's household formation? Well, that's basically the bedrock of real estate demand. When new households are formed, it means people are moving out of, say, their parents' house, or they're moving out of their roommate situation and they're getting their own apartment or getting their own house. And that's generally actually a good sign for the health of an economy if new households are being formed. And we can see historically it's about 1 million per year, historically, new households being formed. But what I want to point you to is this yellow shaded area over the last year. And what it basically shows is that since COVID hit, household formation has surged across the country, going up to plus 2.5 million in March and April of 2020, all the way up then to plus 3 million year over year in July of 2020. If you guys are enjoying this content and you want to see more of it going forward, just hit that like button. When you do that, it gets me more exposure on YouTube. And when I get more exposure, I can actually devote more time to these videos. For instance, I actually went from doing 2 videos per week to 3 in the last month or two, all based off your support. So I'd really appreciate if you could just do that. Additionally, make sure to comment. I want to hear your thoughts on this eviction moratorium and also what you're seeing in the housing market. When you guys comment, it makes these videos better. All right, let's get back to the video. And really staying at this plus 2 million or higher level through the spring of 2021. And what this means is that over the last year, we've had a surprising surge in household formation in America, the most that we've ever seen. We've actually never seen a 3 million year over year increase in households being formed. And this is causing a lot of real estate demand. It is one of the reasons why home prices and rents are surging and that we're in a housing crisis right now. But I think astute observers here, you guys are probably saying to yourself, how is it that household formation in America reached a record high of over a 3 million increase in a given year during a pandemic and a global recession? How is that possible that the demand for homes and apartments increased so much during a pandemic and a recession? And I'll tell you why. It's all artificial and it's all related to the CDC eviction moratorium. Because typically there's 1.5 million evictions per year in America, and those evictions often result in the evicted tenants moving in with friends and family. And when you move in with friends and family, you actually decrease household formation. Yeah, so when you artificially ban the eviction process from taking place, you're going to increase the amount of households being formed in America because that negative aspect of evictions isn't allowed to take place anymore. So we actually had the biggest surge ever in real estate demand during a pandemic where we had massive amounts of job losses. Absolutely crazy. Now, I think some of you might be saying like, oh, isn't that a good thing that we're not allowing evictions? Like, we don't want at-risk people necessarily having to move in with friends and family, especially during a pandemic. I think that's what a lot of people are saying. I'm sure that's what a lot of people at the CDC and the Biden administration think, is that this is a good thing that we're not allowing evictions. There's a problem though, and that's because the housing stock in America and the housing supply was not built to manage this type of surge in household formations. The natural churn that came from evictions every year resulted in an equilibrium where we were like roughly building enough new homes to house the demand. Not anymore though, with a 3 million surge in household formation. We're not building enough to keep up with that artificial government-caused surge. And you can see what I'm talking about on this graph where we're comparing the blue line, which is household formation, the data we just looked at, and we're overlaying it with the yellow line, which is the amount of housing starts in America, the amount of new homes and apartments that builders have started to build. And this historical relationship says a lot about the current housing price crisis we're in right now. So what I want you guys to think about on this graph is that when the yellow line is above the blue line, and there's more housing starts and households being formed, that means that there's actually kind of like a glut of housing in America. There's like maybe even too many new homes and apartments being built. And this was actually definitely the case in the mid to late 2000s, where there was lots of homes and apartments being started and household formation just wasn't even close to keeping up. We can see that since then, both household formation and housing starts have kind of gone up gradually together, kind of equaling each other, which I think is pretty good. It shows the market was in relative equilibrium up until COVID, but then something happened here again during COVID where household formation spiked as a result, in my opinion, of the CDC eviction moratorium, increasing the amount of households in America, not allowing the natural decrease to occur that happens with evictions. And we can't build enough new housing that fast to meet the demand. We just can't. And we could see that housing starts are going up 1.7 million almost over the previous 12 months. That's the highest we've seen in almost 15 years. But we need housing starts to go up a lot more to somehow justify this new paradigm being caused by the CDC eviction moratorium. And so it's just really important to remember that this eviction moratorium has real costs to society. It might be helping a certain small segment of the population, but it's hurting a lot of other segments of the population. I mean, it's definitely hurting landlords. It's hurting lenders, but it's hurting everyone else who pays rent. The people who are actually paying your rent, well, your rent is now going up, as I showed you in the beginning, because the government has created an artificial shortage of housing through this eviction moratorium. And so it's important to understand that if you are for this moratorium, you should understand what the consequences are for society at large. And those consequences are very, very big. Now, I think it's important to address some of the points from the Biden administration and the CDC and the Democratic Party that they're for the eviction moratorium and they're pro eviction moratorium for kind of two reasons. One is they say that because of the pandemic, we shouldn't evict people and we shouldn't cause household size to increase. And that situation I said of an evicted family then moving in with friends. The CDC and the Biden administration would say that would increase COVID spread, and that's one reason they're in support of the moratorium being continued. Another reason that they say is that the economy hasn't recovered enough yet, and it's still hard for people to find jobs and earn money to pay their rent. So those are really the two reasons. I think the problem is that each one doesn't really stand up to logical scrutiny. On the case of COVID spread, I think it makes sense that increased household size could potentially increase COVID spread, but 70% of Americans at this point have received at least one dose of the vaccine, the COVID vaccine, which according to the CDC is very effective at preventing serious COVID illness and COVID death. And so 70% of Americans have received one dose. The vaccine is free and widely available. So as a result, why don't tenants who aren't working and paying their rent, why don't they protect themselves and elect to get the vaccine? That's their own decision if they're not doing that, and we shouldn't hold the entire housing market hostage and increase rent on everyone else as a result of one person or family's decision to get the vaccine or not to get the vaccine. Additionally, from an economic standpoint, things have actually never been better for job seekers in America as they are right now. There's a record amount of jobs available, wages are increasing, hiring bonuses are increasing, so you actually never had more opportunity to find work if you're someone who had a negative financial or economic situation because of COVID. And you can see what I'm talking about on this graph where we're looking at the amount of job openings in America month by month over the last 20 years. This is data from the Bureau of Labor Statistics Job Openings and Labor Turnover Survey, and the most recent data is from May 2021. And we can see actually that the amount of job openings in May 2021 was 9.2 million. We had 9.2 million job openings in May 2021. And you could see very clearly from this graph, that is a record high. The previous record was in late 2018, early 2019, when there's 7.6 million job openings. But now we're over 1.5 million above that record. And so what this means, it has never been easier for someone who suffered, financial hardship, might have gotten laid off from their job and thus couldn't pay the rent. Well, it's never been easier for you to go and find a job than it is right now. The amount of job openings is at a record high, and many of those job openings are promising huge wage increases over what they previously were, as well as generous signing bonuses. And this is where the real frustration with this eviction ban and eviction moratorium comes in, is that it's trying to protect an at-risk segment of society who has every opportunity to protect themselves, both from the pandemic and both from a financial and job perspective. Vaccines are widely available. Jobs are widely available. Why are we continuing to screw over landlords, other renters? Why are we continuing to do that when you have recourse and you have options if you're a tenant who isn't paying your rent? We need to discuss one final point here, guys, and that is the other really negative secondary consequence of this eviction moratorium as well as the foreclosure moratorium. It's going to have a massive impact on the housing market going forward. And this is something that no one's talking about. And I'm amazed that no one is talking about this. And so to understand what I'm thinking here, let's just go back and zoom out. Look at the perspective of a landlord right now. You basically have tenants who aren't paying, and the government's saying, too bad, you can't evict them, you can't pursue them for rent collection. So what do you now do as a landlord in response? Well, one thing you do, we already talked about, you increase rent on everyone else. But another thing that you do as a landlord when you're going now to rent a new unit is that the due diligence you do up front and the income and credit requirements you have for new tenants is likely much higher now, because you do not likely want to get into a situation where you rent to someone who has a higher probability of suffering financial hardship, not paying rent, and thus not being able to be evicted. And this is the cruel irony in all of this, is that I suspect that the eviction moratorium is actually going to make it harder for people who have suffered hardship during COVID to find new apartments in the long run. And I'm already seeing this play out, and I think it's going to get worse. And you can actually already also see it on the mortgage and the lending side. Banks have the strictest lending standards that they've had in nearly a decade. Why do they have those strict lending standards? Well, you have the federal government saying you can't foreclose on mortgages and kick people out of the home. You can't pursue the asset that's rightfully yours if someone's not paying the mortgage. Well, a bank is now saying, well, if that's the case, I'm not going to give any new loan to someone who I deem as having a higher likelihood or probability of becoming a defaulted mortgagee, and thus someone I can't foreclose on going forward. And that's just really the unfortunate thing in all of this, is that this government intervention, which is meant to protect at-risk segments of society that are typically lower income and minority, it's just going to end up hurting them in the long run. And that's really the unfortunate thing about all of this. And what is it also going to do? It's going to crash the housing market. That's right. Because when you have banks saying, I'm not going to make loans, and when you have landlords saying, I'm not going to rent units out unless you have perfect credit score and perfect income, there's only one way for home prices to go when that happens. And so that's the cruel irony in all of this, is the more the government meddles in the housing market, the more that they are guaranteeing a decline in a crash going forward. That surge we saw in household formation, well, the government doesn't want to let that surge go down, but private industry is going to cause that surge to go down. Banks are going to stop lending. Landlords are going to stop renting out units to people that they don't deem perfect in terms of their credit worthiness. So if you guys enjoyed this video and you want to see more of this content going forward, make sure you're subscribed. Only about 15% of my views actually come from subscribers, which is pretty amazing. I want to get that number up. I want to have more of you subscribed. If you like real estate, if you like data, then just make sure to do that. Additionally, if you appreciate this content and you want to support me financially, think about joining the channel as a member. You can become a ReVenture sponsor. It costs $5 a month. You support me financially, but in return, you get some good perks. Particularly, you get input on the videos that I'm going to do in the future. You want me to cover a specific market? You want me to cover a specific topic? Let me know. I'll have posts and polls for members only, where you can give me your feedback about the videos you want going forward. So consider joining the channel as a member as well. All right, guys, until next time, this is Nick from ReVenture Consulting signing off.